Exactly. And DSCR, that's debt service coverage ratio. Everyone's always like, what is it? What is it? I always have to look it up. Debt service coverage ratio. Basically, your mortgage payment to how much you can charge for rent. It's a ratio. Basically, that's really what it boils down to. And an investor, the investor itself who finances you, has a specific average they're looking for. And it depends on the property, and it depends, location and all of that. So, but it's a great loan.
Welcome to the Texas Real Estate Pros Show, where we interview Texas real estate professionals from active real estate investors, lenders, property managers, and many others that provide goods and services into the real estate investing industry in the great state of Texas. Our goal is simple: to share what's working now to help you improve and scale your business to the next level, and to meet the pros that can help you get there. Texas Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and entrepreneurs build the business they need to live the life that they've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Tracey Stillman, has 35 years of experience in mortgage lending, where she runs her own team. She's active in Texas and 11 other states, and she's the senior mortgage lender at Mortgage Right. Tracey, welcome to the show.
Hello, Dylan. Nice to meet you virtually.
Nice to meet you. That's right.
Nice to meet everyone that's listening. Yes, my name's Tracey Stillman. I'm with Mortgage Right. We are a retail mortgage bank out of Birmingham, Alabama. We do cover all 50 states minus New York, because everyone knows what a pain in the ass it is to get licensed in New York State. So no offense to anyone that's a New Yorker. I'm actually born in New York, so I can say that. But yeah, every state, we're licensed in every other state. So, and yes, I do cover 12 other states, or 11 other states besides Texas. So yeah.
Where are you from in New York? I was born in New Jersey.
Yeah, I was born in Rochester. My parents went to Syracuse. So, but my parents raised me in Denver though. So okay. I moved to Denver when I was 4 years old. So I really am I call myself a Denverite, but my passport does say Rochester, New York, however.
One of the interesting things about having these conversations like this is you end up like meeting somebody and you have all these connections that you didn't realize you had. I actually was on this show and I ended up speaking with an investor who somehow owned a gelato shop in my hometown. And this was so crazy. Like, what are the possible chances?
The 8 degrees of Kevin Bacon or whatever it is.
Yeah, that's exactly right. Talking about the lending space, Tracey, we were talking a little bit before hopping on here about some of the newer products that are available in the space, but then also that really no two lenders are alike. So when we talk about something like, DSCR, it does seem to be that there's a lot more people that are looking at DSCR, but also there's multiple use cases for it, right? It's not just for one type of buyer.
Exactly. And DSCR, that's debt service coverage ratio. Everyone's always like, what is it? What is it? I always have to look it up. Debt service coverage ratio. Basically, your mortgage payment to how much you can charge for rent. It's a ratio. Basically, that's really what it boils down to. And an investor, the investor itself who finances you, has a specific average they're looking for. And it depends on the property, and it depends, location and all of that. So, but it's a great loan. DSCR is, I say for anyone that's just getting their feet wet in the investment property obviously residential is what that's used for, but I'm sure there's
When
something commercial line too, but I don't know that.
when we talk about the use cases for DSR, the thing that I've heard most commonly is that for investors who have multiple properties that they're using basically their personal creditors, personally guaranteed, that they can't then go off of a tax return to justify another property because they're going to say, well, you're already maxed out. You have no disposable income for this. So that's where DSCR comes into play. Are there
Exactly.
any other scenarios aside from that where DSCR would be utilized?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
For mainly because someone can't prove their income, right? I mean, that's when I used DSCR. It didn't used to be as competitive as a rate, but it really is very competitive now, versus an investment loan on the conventional side of things, right? It used to be a point or more higher, but now it's more, maybe a 0.5% higher than what you'd get on an
Oh,
investment
wow.
regular rate. So it really has, over the last, I would say, 5 years, kind of evolved on its own in a good way, because it really is. A lot of people that are investing are self-employed, right? I mean, they're flipping houses, that's how they're making their living. And it's a good choice for those that I use it for people that I can't prove income for, 9 times out of 10.
Now, when folks are looking at, let's say, a single family as an investment, single family home, duplex, triplex, quadplex, maybe they're newer investors and they're trying to figure out how they get into this space and they're exploring DSCR. One of the things that I've heard, and I don't know if this is true or not, I'd love to get your feedback, is that it may actually be easier to look at a quadplex, for example, than it may be to look at a duplex or a single family home, because now you've got 4 sources of cash flow versus 1 or 2, even if the total loan amount is higher. Is
Right.
that true?
Yeah, because honestly, it's about how much, right? It's a ratio between what the mortgage payment is versus what you can charge for rent. So if you can get 4 rent payments, right? So it's all about that ratio, and it really is about the property itself, to be quite honest with you, when it boils down to that. I've had people say, well, I want to buy a DSCR home in Allen or something like that. I'm like, well, I don't, if you're in Dallas proper, you're probably going to have a better ratio for what you can get for rent, right? So the location is very important also to a DSCR loan, because it matters how much you can charge for rent
And
versus the mortgage payment.
when we talk about qualifications for DSCR, I'm imagining it's going to mirror on some level what lenders would look at in traditional. Of course, it's different, but you're going to look at credit. You're going to look at disposable.
Reserves,
Yeah.
right? 6 months reserves is the norm, right? So 6 months of a mortgage payment would be your reserve that they're looking for. They're going to look for 700, above a 700 FICO. That's where you're going to get better pricing, right? For sure. 20% down, right? Got to have the down payment, and then you've got to have the reserves. So those are the one thing you don't have to really worry about is the income portion.
Now, for folks who are looking at some level of rehab associated with this, would that be a separate loan product that would then, bridge into a DSCR? How would that work?
Right. We have rehab loans too that are separate from a DSCR. So you can do a rehab investment loan, but there's going to be a different qualification purpose for that loan, right? So the qualifications there are going to probably be, we're going to look at your income for that. So because you're going off a rehab loan, we got to have, it's always risk versus return, right? For an investor, right? So, and when I say investor, I'm talking about the bank. So risk versus return. So, depends on the program. So that like the risk versus return on a DSCR is very visible, right? Well, we can see how much we can charge for rent. Here's what the mortgage payment is. But like on a rehab loan, it's like, well, how much are they going to rehab? How much is it going to be worth when we rehab? All those things. So they're going to look at it every situation differently as far as like a loan product goes.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
I want to pivot a bit here and talk about bridge loans. I've heard bridge loans used in multiple different scenarios. The one that I've most commonly heard it used for is when you're going from some type of shorter term, like hard money construction loan, fix and flip, into something longer term. But then also I've heard it for situations where an exit strategy isn't panning out. Maybe you thought you were going to be able to flip this and sell it, and it's been sitting for 5 months, and you're realizing this is not good.
Right. Yes. So bridge loans are a little bit tougher here in Texas, just so you know, because we have the 50A rule, which everyone should know. And if you don't know that, we can talk, that's a whole other segment of things, to talk about, versus, in Texas with equity. So, that could be a whole segment itself. But anyway, as far as a bridge loan goes in general, it's for someone who, let's say they already are under contract on a new home, and they had a contract on their current house they were selling, but it fell through. This actually just happened to me last week, and I only say that because it did. She thought she was under contract on the house she was selling. The guy walked, so therefore she was like, well, what do I do? I said, well, we can do a bridge loan, or there's lots of companies here in Texas that are they're more like, we buy the home from you kind of a thing.
Yep.
And I have 3 different companies that I use for that. And so I got her hooked up with that person, one of those choices. And it scared her because, they're not, they're giving her this much up front. So bridge loans are, they're all different, but in Texas, especially different. But basically it's just, you're borrowing your equity up front to buy the next house. And then you're going to pay it back once the other house sells. So that's basically what a bridge loan is. And normally a bridge loan is not going to last more than, you hope, 90 days, no more than 180. Then they start dinging you. So bridge loans are great for a short term, somebody that's in a crunch, but they scare people too. So, somebody has to be also, the person has to be willing to take the risk. And if you don't sell the house, they're going to, like, the rate's not great. Like the interest only is a lot.
Yeah, and that's a situation that a lot of folks that are in the single family space have run up against over the last couple years.
Right.
And it's a lot, in large part, because of how much new construction we're seeing, right? So when you've got some, national builders who are putting up new homes outside of the 4 metros, right? San Antonio, Austin, Houston, Dallas, for $230,000, it's hard to, price your pre-owned home at either that point or just below, because someone in their head's going to justify, well, if it's only $20,000 more for this brand new home at a lower rate, it's tough to see. So you are seeing some of these homes sit for longer, and that's why people are having to pivot away sometimes from like a fix and flip exit if it's staying on market for too long.
Exactly. And we've had so much construction, happening, and especially like in 22, someone might have paid, let's just say someone in Van Nuys or Justin bought a house for $550,000 at the top of the market. It's now worth, I just had somebody lose $100,000, like selling it. He went from 550. He had to move for a job and he had to settle for 450. I mean, That's a big difference. So that's what, you're seeing a lot of that new construction kind of going up against that. But the bridge loan does work for, crunch situations. And if you're willing to take on the risk.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
I want to ask you about some of the trends that I've seen more broadly in Texas investing. I mentioned one of them, which is, it's just tougher to do fix and flip. So folks may be looking at some other strategies, whether that's a short-term rental Airbnb or, long-term year-to-year lease. Corporate housing seems to be coming up to, traveling nurses and what have you. But I've also seen a lot of development, and not just from, national builders that everybody knows, but also from folks who may be newer developers, folks who may have been, a single family investor or a flipper, and now they're realizing, hey, in order to compete, I've really got to be able to get into ground up construction, new builds. Is there any overlap between the lending that is done on, single family homes and lending that is done in new development, new builds, or is that like a total other area entirely?
It is a totally different market for sure. Especially if they're going into like multi-unit develop, like I don't want to say apartments, but maybe like
Townhomes, something like that. Yeah.
something like that. I mean, we can, in a regular world of mortgages, we can do a 2 to 4 unit building standard, but like if you're going to do, units with like 10 or whatever, that's a whole different ball game into the commercial side of things.
Now, is that standard for folks who are lending on single family 1 to 4 to also lend on ground up construction 1 to 4, or is that uncommon in the lending space?
It used to not be uncommon. It used to be, 7 years ago, it was a thing. Flagstar did them all the time, but now they're just, because of this, the way the housing market kind of changed, they had to pull back a lot of that construction loan lending. It's a lot harder to find a lender now for construction.
One of the tricky parts of this too is there's a huge onus on the operator, right? So if you're a newer operator, there's so much that you're going to learn effectively. And of course, you're going to see this in rehabbing as well. But typically when you're looking at a pre-owned home, you kind of generally know that, hey, there might be some foundation issues, that, roof, this and that. But if this is your first time doing a new build, now you're having to look at the soil, and laying foundation and, managing framing. Like there's whole other area of rehab
Yeah.
that I have no experience with. This can cause someone to really fall behind, not to mention like permitting and zoning and things of that nature.
Exactly. Yeah. I mean, construction is a whole other animal. Like it really is. And you have to have the right investor to give you the construction loan. You got to know if there's a beginning construction all the way through to permanent financing. We used to have a lot more products. Now we have one. I mean, it's like, you really have to research that before you start that project, because you start the project and you're like, oh boy, I've enough more than I can chew. And it really has changed. The construction loan business has changed a lot in the last 7 years. They used to be a dime a dozen, and they're just not anymore.
Yeah, it's a trickier game to play, no question. Just because you can swing a hammer does not mean that you can build a home.
Right.
I do want to ask you about Dallas. I lived in Denton, right, and DFW Metro, and living up there, having moved from San Antonio, I lived in San Antonio for about 4 years. I realized Dallas has got to be one of the, in my opinion, personal opinion, one of the best markets to watch real estate investing, to participate in real estate investing, to be a homeowner. I think for so many reasons, for the entry point, for the number of people that are moving there, for the businesses, also for the national interest that right now is on Texas. Dallas seems to have a lot really going for it from an investment standpoint.
100%. And there's businesses coming here all the time. We're going to have the stock market here, for God's
Right.
sake, like kind of a big deal. So, DFW is a great area to definitely think about being an investor or being a homeowner in general. You just have to, again, and this is what I would say to anyone, like whatever you're deciding to do something in the real estate, make sure you really focus on location and what your goals are and what, like a lot of people will say, well, why do you live in Dallas? And I'm like, well, I'm not raising children anymore. So I don't really have to worry about a school district, right? So, living in the city of Dallas, you have to think about that if you're raising kids, right? Well, I probably would send them to private school, which a lot of people in my neighborhood do. But I think location, no matter what the situation is, always know where you're looking for your location for your goals. And that's just what I would say in general.
Yeah, I echo that. You hit the nail on the head, right? So, if you could have, predicted however many years ago that there would be this, corridor from DFW straight up to Oklahoma that was just going to be, town after town after town, and that this was all going to be developed, you would have said, well, I'm just going to buy everything that I have the opportunity to. So, you see these kind of concentric circles of expansion. And so really, if you're anywhere in the DFW metro or surrounding area, you're probably in a good spot, especially if you can afford to hang on to that asset for 5 or so years.
Right. And that's what that's why when I was talking about that house that was in Justin or Van Nuys or wherever he lost money, it's just because he didn't hang on to it long enough. Like he didn't have a choice. He had to move. But I think in general, in the DFW area, you're going to get a good return on your money, period. Like you will get it if you hang on to it long enough. And that's in general real estate anyway, but
it's maybe more true in some places than others, but yeah, absolutely. We are actually coming up on time here, Tracey. Where can our audience go to reach out to you? And maybe they need a loan for themselves or a project they're working on. How can folks reach out to you or your team?
absolutely. You can find us at StillmanBiggersTeam.com, and that's Stillman, Stillman, Biggers, B as in boy, Iggers. That's my son's last name. Team.com. That's our website. Or you can call me directly at 303-346-5349. Or you can email me at tracy.stillman@mortgageright.com.
Tracey, thank you so much for coming on the show today.
Hey, Dylan, it was a pleasure. Let's stay connected. I appreciate you so much.
Thanks for joining us for today's show. If you're looking to take your business and your life to the next level, you really need to learn more about the Investor Fuel Mastermind. It's your shortcut to success. To learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other amazing entrepreneurs, 100% financing on your deals, member-only discounts, and so much more, please visit investorfuel.com/Texas. By the way, Investor Fuel is even Texas-based. Also, if you're interested in applying to be a guest on this very show, the Texas Real Estate Pro Show, please visit investorfuel.com/Texas. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe on YouTube or your favorite podcast app so you never miss another episode. We'll see you on the next show.